What are insurance policies in terms of asset classes? Hi, my name is Professor NyakaroHelping, Professor Emeritus of the School of Hard Knocks and an award winner of the Association of Kenya Insurance Agent of the Year Award. Twice, not even once. I qualified twice. So I know what I'm talking about when it comes to money. In any case, I've listed them out for you here from cash all the way down to land so that we can understand each asset class, its liquidity, meaning how fast it takes for you to transfer that asset class into money, the risk involved. For example, there's a high risk investment over here like stocks and shares. It is high risk if you don't understand. It is very good returns if you understand how to use it. So all these asset classes, none of them is good, none of them is bad. It is just understanding what each asset class can do for you so that to take advantage of it, isn't it? Yeah, so today I want us to discuss or rather to understand insurance policies. Now, when people hear about insurance policies, it's like it triggers some trauma, and I get it. I understand, because in the Kenyan market we have really suffered under rogue insurance agents. It is true, I have been an insurance agent in this market. These days we are called financial advisors because we are being trained now to talk about all aspects of financial planning. And me, as part of the pastorless, I'm even adding spiritual aspects, because wealth is spiritual, and to manage wealth without managing the spirituality of wealth, in my opinion, excuse me, is a waste of time. So most Kenyans, most Africans, I might say probably south of the Sahara, our insurance, our what is it called? Our experience with insurance is mainly property insurance, and in fact, most of us, the only insurance that we have ever interacted in is car insurance. And funnily enough, the association, according to the Association of Kenya Insurers, penetration of life insurance in Kenya is either 0.03 or 0.3%. Whatever the case, it's less than 5% of the population. I tend to think it is because of lack of understanding. And here I am now to demystify how insurance works, so that those of you who have been misinformed or been wounded or disappointed because you didn't understand what it was can understand today and begin your journey towards financial healing, which also means embracing insurance policies, because insurance policies and insurance is a very, very important aspect of financial planning. And you cannot have a proper, well-rounded financial plan without some type of insurance. So how does insurance work? And why do insurance policies lapse? First of all, what is a lapse? A lapse means, let me use car insurance because it appears as if we Kenyans, we are more versed with car insurance than anything else. If you pay for your car insurance on 1st of July, it lasts 12 months, 365 days. So you are likely to be renewing it 1st of July or 30th of June the previous month. I mean the following year, isn't it? If you get to 1st of July or 2nd of July, let's go and say 2nd of July, without having paid that insurance to that insurance broker or agent for your car, and then you had an accident, is the insurance company liable to compensate you back for the damage of your car and probably the damage of the other person whose car you have affected, if you have not paid that insurance, even if you did not pay for 1 day? That is the question. So you say you have been paying for my insurance for the last 10 years. This time I failed to pay and I was late for 1 day. Should the insurance company pay your premium? But I tend to feel that is the expectation when it comes to life. And I think Africans, we have a very skewed way of looking at things. We insure our assets, and then we expose ourselves, to risk. And we do not take life insurance, I think mainly because we don't understand. So what happens in insurance is, we take one risk. Let's say death by accident. We take one risk. Let's call it death by accident, for example. And we invite everybody who wants to be insured. If you die by accident, God forbid, you'll be paid 1 million shilling. So we collect everybody who wants to be paid, who wants their financial dependents to be paid were they to die by accident, and we put them in one pool. So you pay, I pay, everybody pays. We are all not going to die at the same time. That is the principle of insurance, one of the principles of insurance. So the money that we have pulled together is used to pay those people whose risks have occurred during that time. So if you have not contributed, even if you have not contributed for a month or 2 months, should the insurance company pay you when the risk occurs? Once you understand that, you'll understand why it is very critical for you to pay your premiums and to pay them on time. But I think I have overstepped. What type of an asset is insurance? Insurance, especially life insurance. Let's talk about life insurance. Life insurance just means should something happen to affect the quality of life in as far as your financial contributions are concerned, the insurance company should compensate you. Now, say I have this specs case for my specs. By the way, it's a good thing I have them here. Now, these specs of mine, let's say I insure them for 20,000 shillings. If they break and they smash, and I had insurance for a year, during that year, the insurance company is supposed to have valued these specs and told me for us to pay you this amount for these specs, you need to pay us this amount of money. Those are actual sciences things, those are beyond our scope. But when it comes to life, you cannot measure someone's life. You cannot say your life is worth 500,000, your life is worth 1 million, your life is worth 5 million, your wife is worth 10 million. So what they do is that they calculate based on premium. How much can you pay into this pool I mentioned initially for you to now determine out of that pool how much to pay you when your event occurs. I hope now I have spoken in simple English. That is how insurance works. When the risk happens to me, and since I'm a member, are contributing to the pool, my payout together with all those other people's payouts who have been paying, pays the person who the risk happened to. So for life insurance, there are long-term policies, there are short-term policies, but generally life insurance policies, you'll very rarely find a policy that is less than 5 years. Why? Because when it comes to those risks, life is generally seen as a long-term contract. We're looking at probably from birth to the age of 80. So you see now, giving people life insurance policies for 1 year, 2 years, like a car, doesn't make sense. So you have whole of life policies. When you have a whole of life policy, the premium payer pays premiums for the whole of their life. But if they reach 80, at least with the premiums that I know, if they reach 80, they stop paying premiums for the rest of their lives, and whenever it happens and an event occurs later on in their lives, the insurance company will pay. So what is a whole of life policy good for? A whole of life policy is good for someone who is interested in leaving an estate. Our parents, our grandparents, they are wealthy and they are not using so much of their money. So someone might decide, I want to I am receiving rent of 100,000 shillings. Instead of putting this money in a bank account, let me take an insurance cover and pay 20,000 shillings out of this 100,000 shillings. If something happens to me, my family will get 20 million, 30 million, 40 million. The differences between premiums and payouts for life insurance is very high. So what am I saying? If you don't understand life insurance, there are some aspects of life insurance and advantages you'll be missing out. For example, it grows life insurance. The life insurance policies have an investment aspect usually tied with them. Very rarely will you find just a pure risk life insurance, though they do exist. Many of them also have a savings aspect. So inside that your 5,000 shillings, you also get a life insurance out of it. You might get a waiver of premium benefit out of it. All those are benefits that you get from life insurance that you cannot get from any other of these asset classes. No land will pay you if you get sick, or if to pay your family if you die. No mangoes or livestock or anything will pay anybody. The only asset class here that will replace your life and your earning capability should you pass away immediately is life insurance. So take life insurance seriously, especially if you have financial dependence.